The Nigerian Deposit Insurance Corporation is asking Nigerians to keep saving their money with commercial banks because they remain the safest, smartest, and most prudent place to save, and the only way through which the corporation can protect bank deposits. The corporation says such deposits enjoy the benefit of effective regulation and supervision of relevant authorities and take people's hard-earned money beyond the ambit of illegal fund managers and loan sharks that currently awash the investment landscape and fleece unsuspecting members of the public. Well, amid this assurance from the NDIC, let's take a look at the performance of Nigeria's banking system. And I have joining me partner and chief economist at PricewaterhouseCoopers, Dr. Andrew Nevin. He joins me via Zoom to analyze this pretty interesting conversation. It's good to have you join us on the program as always. Very interesting how you see Nigeria's banking sector, rise above the economic headwinds to both domestically and globally. I want to get your reaction first of all, because pretty interesting story we've heard in the last week.
Well, I mean, Sarah, it's great to be here. Thank you so much. I mean, I'm not really surprised. I mean, you mentioned earlier in the show, of course, we had a financial crisis, a banking crisis in Nigeria in 2009. I was here in the country at the time, and in fact, what brought me to Nigeria for the last almost 15 years was working with His Royal Highness Mohammed Sanusi II when he was central bank governor on the aftermath of that crisis. And I think that coming out of that crisis, we've just had a very good banking system put in place, a very good regulatory regime put in by the central bank, and really a dramatic increase in the quality of governance, the quality of management, the quality of IT of all the banks. And of course, you said I'm chief economist at PwC, but in fact, my main role is to oversee the financial services sector work we do. So I'm disclosing, of course, every bank in the country is a client of ours. But really, the quality is very high. So I'm not surprised to see the results. I mean, what's happened, of course, is the earnings. I won't name any individual bank. They're all friends. But the earnings have increased in general between about 10 and 40% across the board at all the banks. But that said, we have to remember that the inflation rate is over 20%. So in fact, if your bank gains 20% in earnings, it's about standing still. If it gains 30% in earnings, it's making some progress. So good headline results, not bad overall results, but still not great in the context of a 20% inflation. But as I said, the quality of the management, the quality of the boards of the bank has increased so much over the past 15 years. I'm not surprised they're displaying this kind of resiliency.
Well, as against projections, that had been made earlier in the year, considering the cash crunch and some of the other challenges, the sector faced, one would have thought that they wouldn't do so well compared to the 9 banks that have released their quarter report, the end of the year report, and talked about the profits that they've made in the last year. But if you take a look at the inflows from foreign countries now, it has dropped drastically, and this is key for investment and confidence in the market. So talk to us about how this is affecting us as a country.
Well, I mean, we've said for a very long time, I think we used to put out the numbers that said we need about $25 billion of foreign direct investment a year. I mean, that's not a bad thing. We just don't have sufficient savings for how fast we want to grow. We should be growing the economy 6, 8, 10% a year, and we're only growing 2 or 2.5%, 3%. And of course, because of that, more people are slipping into poverty. So a big gap in that is the lack of investment. And the reason for it, in our view, is very simple. I mean, it continues to be a very harsh environment for our investors. And we hear story after story of not just foreign investors, but domestic investors facing challenging regulatory environments, overlapping MDAs, multiple taxation. And of course, we also have, particularly for the foreign investors, the FX regime. I was at an event on Saturday at the Landmark Center in Lagos, and there was a diplomat from one of our major investors who said the single biggest thing he gets asked by his business community investing in Nigeria is the multiple exchange rate regime. And simply put, people are not going to be investing in the country when they're confused about the exchange rate and confused about the repatriation of the returns from an investment. And this is something that we said very clearly in 2017, 2018. Sadly, it's come to pass. We said at the time, if we continue to have multiple exchange rates, we're just not going to simply get foreign investment in the country. I mentioned a little earlier that we need about $25 billion. That was the number we put out a few years ago. and we got less than 1 billion last year in 2022, according, I think, to the Nigerian Bureau of Statistics. So it's a woeful performance on that, but it's a harsh business environment overlaid with this FX regime that makes it very difficult for foreign companies and for Nigerian companies and for the diaspora to invest in this nation at the moment.
But we know we've seen the results, and they're not looking so bad, but if you'd advise, what innovative ways do you think these banks can adopt to make more profit aside increasing lending rates, which is beyond them in most cases?
I mean, I think what we're finding with the banking sector is the banks have realized that just the basic banking is not going to be sufficiently profitable. And you've seen a number of banks, again, I won't name them, but it's very public information, have moved from being a bank to a holding company. So this means they can participate in other businesses other than banks. So if we go back to the financial crisis, what happened at that time was the banks would hold an insurance company or an asset manager within the bank. And that led to all sorts of regulatory issues and problems with the numbers. So one of the regulations that His Royal Highness brought in at the time was you could be a bank holding company or you could be a bank. If you wanted to do something like insurance or asset management or investment banking, it had to be within another company in the bank holding company. So at the time, there were only a handful of banks that chose that route. Over the past few years, other banks have realized with the fintech revolution, with hopefully the explosion in asset management, pension fund management, they wanted to be in other businesses. So I think about 4 or 5 Nigerian banks have done that, and it's in recognition of the fact that they want to move beyond the core banking, and they also want to be able to compete with the fintech. So in terms of growing their income streams going forward, we don't think it's going to come from the core banking. It's going to come from these other businesses that they add on under the holding company structure.
I think very pretty interesting conversation I want us to take this to is, to the fact that they're saying that this is the safest, smartest, and most prudent place to keep your money, which is the banks. But a lot of people here in Nigeria still think that, particularly when they went through the cash crunch period last year, and till now, some persons still can't get so much cash in their hand. And so you see that some persons are not even taking their money to the bank anymore because of what they went through last year. So I wanted to help us better understand what digital platforms, can actually do to help in this case, because they're taking over globally, and Nigeria cannot be left out. And so I wanted to talk to us about how worried you are about the impact they have on the stability of the market.
Well, I think overall, I'll come to a moment in the Naira redesign and the impact of that. But I mean, overall, I'm not worried about Nigeria falling behind in terms of digital platforms. I mean, we've really been at the forefront of many digital things. And in fact, the banking system, it's quite amazing. The banking verification number, for example, I mean, the amount of P2P transfers through the NIBS platform is incredible. The e-Naira has been a little slow in the last year, but really picked up during the crisis of the Naira redesign. And of course, Nigerians are so innovative. There's so many fintechs that are coming through. But as you mentioned, some are illegal and not necessarily platform companies you mentioned a little earlier in the show are illegal. So there's a lot of dynamism in the sector. With respect to what the chairman of the NDIC is saying, I mean, of course, bank deposits are insured, and people should realize where they're putting their money, what the safety issue is. The problem with the Naira redesign is it really damaged credibility in the banking system for a few reasons. I mean, one, you couldn't get your money out. And of course, the most basic thing is if you have money, you want access to it. So people having gone through that are simply going to say, I'm not going to be part of the banking system. I can't rely on being able to go to the banking hall, get out my money. I can't rely on going to the ATM, getting out my money. So I'm going to keep it in cash. The other problem, though, in terms of us embracing the digital revolution and money is, well, we've made a lot of progress. I mean, it's something that you can do largely in Abuja, where I am at the moment, or in Lagos, or in Benin City, or in Port Harcourt. The problem is when your money is in electronic form, it's only accessible if you have power and you have a device and you have connectivity. And a lot of the population don't necessarily have access to that. So here you have your money. It's your money. You should have access to it at any point in time you want. Mm-hmm. And yet, if you put it in electronic form, you're subject to what's happening with the power system, to whether the internet is working in your neighborhood. So really the constraints under joining this global revolution is it's not a constraint in a city like Lagos, but it's a constraint in a lot of other parts of the country. It's really the power and the connectivity that are really critical to people being able to embrace that. So I think that someone's perfectly logical to say, unless I have access to my money, I'm going to keep it in cash. So it's important for the banking system and the CBN if they want to get deeper into this electronic cash, they want the e-Naira to take off, to also participate with other players in the economy and the government officials in these other areas, because the bottlenecks to the electronic financial system, as I said, is the power and the internet the broadband connectivity.
A pretty interesting conversation, but some persons would think, I just remember that particularly the older folks, even young people, after going through that episode with the cash crunch, of course, demand deposits are reducing. The drop to 19.9 trillion naira in the first quarter of this year. That's according to the Central Bank of Nigeria. So if you take a look at how people are now approaching some loan sharks, some digital platforms to borrow money and see how they can get money out of the system, how safe is that? How safe is that market, particularly for a country like Nigeria that is just getting exposed to so many lending platforms?
Well, I mean, of course, lending is different than access to your money. When I borrow money and I owe someone money, I'm not at risk of, in a sense, losing my money, right? As long as the person is running an honest business. I mean, we've had a lot of problems with the lending platform, as you know, where if someone is late with a payment, then what happens is they've given permission to access their contacts, and the contacts are inundated with very unflattering messages about the person as a debtor. So I think the regulation of that is really critical. And on that. But what people should be very careful about is unregulated savings or investment platforms. I mean, we've had problems with money, for example, in this country, really essentially Ponzi schemes on that. SEC is very worried about that. NDIC said, the chairman came out yesterday and said, your money is safe in the bank. So I think what's fair to say is your money is safe in the bank. But and of course, during the financial crisis of 2009, there were 9 bank failures, but not a single depositor in Nigeria lost any money. So from that viewpoint, I think the NDI chairman is exactly correct. On the other hand, if the banking system doesn't make the money available when you want it, where you want it, then it's not serving people. So I'm not surprised people are going to cash. But to then go to an unregulated investment platform, I think people are taking a real risk. And of course, we've been through this recently, not just the Ponzi schemes, but we're still going through it with the use of cryptocurrencies. People in Nigeria are one of the largest users of cryptocurrency. The jury is still out on whether they have real value or not on that. But the other problem with the banking system, of course, is it's such a high inflation environment, people are losing money. So the banking system in your savings account is paying 3% or 6%, and inflation is 20%. While your money may be safe in the banking system, eventually you'll get it out and won't lose it no matter what happens. But at the same time, the value is eroding. So it's not surprising in that kind of situation that people are looking for alternatives. In some cases, alternatives that are carrying a very high risk on that. I mean, all of this points to the fact that the CBN and the sector as a whole has to continue to improve. It has to continue to create these electronic products that people have access to in a timely fashion, and the connectivity and the power that I mentioned before on that. And we need to be vigilant in the sector in particular about unregulated platforms that take people and promise investment returns that don't materialize. I mean, there's nothing worse. I mean, we all know people who've made unregulated investments and lost their money. And it's really a tragedy in this country. And we need to create a robust security system that people can put their money in and know.
I was going to ask finally, what is your outlook for the rest of this year, particularly for banks, considering the cash crunch and other challenges they faced early in the year and late last year?
Really holding back all of these sectors, unfortunately, the economy continues to struggle. In the banking sector, the securities sector should be growing 10, 15% a year minimum, but they're not going to grow that fast while we're only growing the economy 2 or 3%.
I'm asking, what's your outlook for the rest of this year for banks, considering the cash crunch and this latest development or story that you're making more profits? What's your outlook for the rest of the year?
Well, I mean, people know that I try not to make predictions about the future. But remember, the cash crunch didn't necessarily affect it wasn't the banks that caused it, and I don't think people necessarily blame the banks for it. I mean, obviously, when there's a decline in deposits, it's going to put pressure on their profitability. And of course, all the results that I talked about are the results for the year 2022 for the banks, which should be audited and released now. So we don't have the results for 2023, even the first quarter on there. I expect they'll take a hit. They're also going to incur more costs because of what was going on in the banking system. So I don't think we can expect the same if the bank grew its profit after tax by 30%. It may not grow its profit after tax by 30%. But I mean, the whole industry obviously has some work to do to repair the damage that's done to its reputation. I mean, you want people to have a trust in the banking system and trust in the banks. And that was severely damaged by the Naira redesign implementation, as we know. So people who've been hurt by it and haven't been able to get access to their cash. And I mean, we really caused an immense amount of suffering in the country by it and an immense economic impact. I'm very interested to see what the NBS says about the GDP figures for the first quarter between the election, the two elections, and also the Naira redesign policy, what happened to the economy. But all the anecdotal evidence says it really harmed it. So all of that creates work for the financial system to reestablish that credibility that was destroyed. And to be honest, it may take more than a few months. It may take years to get that credibility back.
I think, sorry, I know I said finally, but I just remembered something. I was going to ask, what do you think is responsible for the profits that banks are making, even though we had a drop in deposits?
Well, remember 2021, well, the drop has come more recently. But remember, first off, as I said, inflation is 20%. So if a bank earns 20% more, they're not really making any progress. They earned exactly the amount they earned the year before on that. I mean, I think that the electronic development of banks, of course, helps their cost structure. More and more transactions are done electronically. The banks have a big spread on their margins. They were increasing interest rates during 2022, which helped their margin spreads if you look into the details of the bank's profits on that. So all of that helped them. But as I said, one thing that people need to realize is I think every bank that perhaps one in Nigeria trades below its book value on the stock market, which is incredible. I mean, in a normal economy, what happens is it usually trades between 1.5 to 1.8 times book. But when it trades less than book, it's essentially saying that shareholders think, the market thinks that the value of the bank is less than the tangible book value, which really says that even though we are posting these headline numbers that may look good on the surface, people don't have confidence in the economy and don't have confidence in the long-term profitability of the bank. So as I said, at 20% inflation, the numbers aren't nearly as good as they said. Really, the banking system is treading water. Now, whether it may I think in 27 days. I mean, it's an exciting time. We may see a rapid turnaround. I mean, people who listen to me speak know that I'm a great optimist in Nigeria, and I actually really think that we may be poised for a real takeoff. So we'll see what the new administration does, and hopefully banks and all Nigerians can have a very good 2023.
Yeah, we're going to take that optimism to the bank. Thank you so much, Andrew Nevin, for speaking with us, partner and chief economist at PricewaterhouseCoopers. Thank you so much for joining us on the program.
Thank you, Sarah.